Good afternoon, South Coast. This is Ron Oliveira of Team Rosso at Remax Vantage. We're here for another episode of the monthly mortgage update. Everyone's hearing rates are climbing. What's actually happening right now? Is this temporary or is this the new normal? I have mortgage expert Jared Methia here from Milestone Mortgage Solutions. Jared, thanks for being on here. We need your help.
No, my pleasure, Ron. Happy
People are
to be here.
scared. What's going on out there?
Yeah, a lot of
Why are rates rising?
probably majority is based off what's going on in the world and Iran, and it's creating a lot of volatility in the market. And unfortunately, with that,
What the hell's that got to do with New Bedford, Massachusetts?
Yeah, you're telling me that's the.
They're blowing shit up over there. Like,
Yeah.
why is this like shaking up our local economy?
Yeah, no, it's the golden question, and a lot of times you'll see online when rates do drop, where we were coming into a 3-year low. Well, we did hit a 3-year low of interest rates, which is obviously a great thing for everyone involved.
That lasted like 30 seconds.
Yeah, it lasted about, probably three to 5 days. And then next thing you know, what happens in the world happens and things go crazy. One thing we always try to focus on and let our agent partners know and our clients know is that the Federal Reserve, they can cut their rates. They can do what they want. And everyone thinks, oh, the Fed cut a quarter. 30-year mortgage notes are going to be cut a quarter too. That's not the case. If you are going to be one of those market watchers and you want to be, try to become educated in the space of, mortgage-backed securities and all that, what you're going to want to focus on is the 10-year U.S. Treasury bond. And that's right now it's at like 4.3, which is not great for us because the 10-year usually reflects, 2 to 3% lower than where a mortgage rate, interest rate is actually going to be on a 30-year loan. So, if we're at 4.3 on a 10-year, rates are going to be in the mid to higher sixes, even creeping back into the sevens, just being that 2 to 3% higher. Right. So the Fed cuts aren't going to necessarily impact mortgage rates at all. So if you're going to be one of those people out there trying to time the market, oh, the Fed cut, they did this, they're moving here, focus on the 10-year and always factor in about 2 to 3% because, these investors, they need to make their yield spread and make money off of their loans that they're selling. So that's the big driving factor. I try not to get too involved in that.
Yeah, like the average consumer doesn't give a shit about
if
any
you do
of
that, you're just going to run into, you're going to be in a rat race of saying, when the best time to lock in, when's the best time to buy. These are all questions that,
we
have
really
always been
want
around.
to educate the consumer and not panic because they're sitting on the sidelines. Everyone was like, oh, rates are coming down. The Fed's going to cut rates. And this is going to be our market, the spring market, some market 2026. This is our year to buy a home. And then some people are like, oh, rates went back up. So now let me put that on the shelf. I want to talk about so those people who have that mentality, what's the cost of waiting? So now I was out there shopping with Melissa Gagney, looking for a house in Fairhaven. We're going to open houses, and now I see rates just jump back up. I'm like, listen, you know what? I don't want to go looking anymore. I'm disgusted with it. My payment's going to go up. How much is my payment going up because of this? If I was shopping 3 weeks ago during those 3 to 5 days the rates came down versus today, what's my difference in payment?
Depending on the loan size.
$500,000.
$500,000, 0.5% on the interest rate, probably $300 to $400. You know what I mean? So what we've been trying to implement, and I implement always, is I don't even talk rates with clients. Something I focus on is obviously two big things clients or buyers are worried about: out-of-pocket cost, monthly payment. Those are the two most important things they worry about, minus finding the perfect house. And with that being said, people are losing out so much with being focused on interest rates, where they're at, trying to time the market, and they're actually losing at the end because you're waiting. Opportunity presents itself. You don't jump on opportunity.
I want to fight that fight. I'm not happy about that 0.5%. Yeah. So what can I do to fight that fight? Adjustable rates?
It's a great option. It's coming back again. I was very heavy in, the end of 24 and all of through 25 on adjustable rate loans. That's what I was writing because, they were substantially better and we were getting people out of them,
I liked... I'm that first time FHA buyer, 3.5% down. I want a nice, comfortable, fixed 30-year payment at 6%. Not happening, right? We're now at 6.5%. Yeah. FHA and it's $300 more bucks a month. Tell me how I can fight that fight and get me back to 6% and get my payment back? Like, what are some of the tools?
My opinion, a great option is to look at seller concessions, utilize that to buy down the interest rate, or you could utilize your own funds to buy down the interest rate, because we run into a lot of things too with first-time buyers. They're like, oh, I'll just put another $10,000 down if they have it, right? Not everyone does. I'll just put another 10 grand down. It's going to change my payment so much that I'm going to be so, much more happier with the situation, where that $10,000 down, that's only changing your payment about $60 a month.
Right.
Which is like, when you tell people that, they're like, oh, wow, I'm very surprised by that. You use maybe $5,000 of that 10,000, keep $5,000 in the bank for, furniture and all that fun stuff when you do close, utilize the other $5,000 to a permanent interest rate buy down, and you could lower your payment hundreds of dollars a month.
Right. So if we're doing ARMs, what does that look? 5 years, 7-year ARMs?
Yeah, I was big in the 7/6 ARM, which means it's fixed for the first 7 years. If you stay into it for the entire term, so if you're in for 84 months, then it adjusts every 6 months. So it's not like when the ARM comes to that.
But this is after 7 years.
After 7 years. So you're more oftentimes than not.
What's the lifetime of a loan these days?
The average right now was around, right around 7 actually, which is beneficial for people that are going into the. I'm personally in an ARM myself, because when I bought, rates were in the 7s, and I didn't want to be in the 7s.
Yeah. How many people do you know that have been in a 30-year mortgage and never refinanced, and have lived in that house for 30 years and made all the payments till the last one?
We're probably,
besides my mom.
Well, yeah. So, man, when was COVID? 5 years ago. So we're probably 25 years from somebody actually being able to say, I was in a 30-year loan, the entire length of the loan, assuming they never ran into any hardship of having to pull money out or things like that, because those COVID rates are in the 2s and the 3%. So we're far from seeing someone do that.
So let's play it forward. I get into this adjustable rate mortgage, right? Or I buy down the rate. 7 years go by. How much have I saved? How much have I paid down the mortgage? The tax benefits. Like, these are the things that people aren't looking at, the cost of waiting.
Yeah.
What are you seeing now in mortgage applications? Like, what's the average rent you're seeing?
Man, I'm seeing some come in, on the lower side, in the low $1,200, $1,300. Then I'm seeing some come in. They're saying, "Oh, I paid $2,800, $2,900 a month." I'm like, "Oh, geez." Like,
so let's shoot right in the middle, right? Yeah. $2,000 a month times 36 months, right? What is that? 24,000. That's $72,000 going to what?
Zero.
Me. Thank you.
Yeah.
So
right.
that's $72,000. You're paying rent, and you're not receiving any of the benefits. So that's 72 grand. No return on that $72,000. Average home prices increasing 3 to 4% a year, right? So over 3 years, the home prices are going to increase, and this is just a moderate increase, 3%, which they've gone up more than that. This is a very low average. Over 3 years, $46,300. That, again, could be to the buyer's good right now. They're not paying attention.
Instead, you get it, which good for us, right?
Yeah, exactly.
I mean?
So the houses are going to be costing that much more. Built-in equity. I think if you make all of your payments over 3 years, this is something that they're not taking into consideration. That you would have built up at least just by paying down your mortgage over $15,000, because they know part of the payment in the first 30 years is going to be is interest.
It's a great point on the ARM side of things too. Whether you're in a 30 or an adjustable rate, those first 15 years, majority is pretty much all of it. If you look at a mortgage statement, is going towards interest. And the end half of a mortgage is when you're starting to pay the principal. So,
but you're still paying some principal.
Yes, just a smaller amount. Which if you look at it, you'll get sad. But that's how mortgages work.
So we're already at $72,000 in rent, $46,000 in appreciation, paying down your mortgage over $14,000, tax benefits. So if you're paying rent, yeah, you could write off your rent or whatever, but now you have a house and you're writing off the some of the expenses of the house. You have a home office. People don't realize on a $500,000 house the lost tax benefits. You want to take a guess? $9,000. So $9,000 more dollars in tax savings you could have if you have a house. So if you add that all up over 3 years, it's $141,000, just under $148,000.
There you're missing out.
That's what it's costing buyers to sit on the sidelines for 3 years, saying, "Hey, rates are too high. I'm gonna stop going to these open houses. I'm gonna wait till it gets back under 6. We can get you closer to 6. We can save you some money.
And it's not like 2 years ago, a year and a half ago when rates were in the high 7s, 2 years ago when they were even in the 8s, people were still buying. Like the serious buyers will come out to play and they will still purchase property. It's the people that are on the fence, the genius at home, timing the market, trying to do all this, be, strategic about it. It's always good to be strategic about purchasing the home. That's why you get in touch with a real estate professional and mortgage advisors to, cover everything that you need to be protected on. Waiting is just the game you don't want to play. We see it on refinances. All of, last month, we're reaching out to past clients that are in the high 6s, low 7s. Hey, we'll get you in the low 6 right now, drop you a point, save you a couple $100 a month. Some people say, no, I want to get to 5%. I want to get to $500 a month savings. Them saying no to that, saving the $300 a month, now they don't get to save anything because rates went back up, and it could be month, 2 months, 3 months till rates get back to that point. And when they do, that's when we make the calls again and say, hey, what you saw just happen could happen again. Do you want to utilize what we can offer? If you're saving $300 a month, it's just under $4,000 a year. You want to save that or no? Because some people will hold out and say, until I can get $500 a month. But if you be stubborn in this market, you can get burned.
Right. Why are you seeing buyers getting priced out? Are there still you still seeing a lot of opportunities out there for people that are getting pre-approved? How often have people come to you with properties under contract right now?
Yeah, applications are still up. We're still having mortgage applications come through the office. I'm busy. The entire team is still busy.
People think the market's at because rates went up a little bit. They think that the market's stagnant.
Yeah, no. We're still turning over the same amount of business. I think last month was one of our bigger months as a company. The exact number I don't have, so I'll have to get that from Vern or our marketing director. But I'm not seeing anyone at a disadvantage. I'm seeing almost an advantage of the buyers that are serious, because you have all these pre-approved buyers from 6, 12 months ago that didn't purchase yet, and now they're just even more scared. Then you get that new buyer, first-time home buyer coming through who's ready to go. And the second you tell them, yep, you're pre-approved for this amount, they're excited that they're qualified. They're hitting the streets trying to find the home, and they're going to be the ones taking the advantage of the market, of some buyers being scared and back to the sidelines. It's always the same thing, right? Whoever's on the sideline, you're going to lose.
What strategies are you seeing some of the smart buyers using right now in their financing? Are they doing, to get their either? We've talked about buying the rates down. Is there something about maybe rolling in closing costs?
Yeah.
What do you think are some of the advantages that some of the smart buyers are using right now?
Yeah. So one is an option is say a 2-1 buy down, which would be, just to keep numbers round. Say if rates were at 6.5 and you utilize a 2-1 buy down, you get a seller credit to cover it. First full year would be from 6.5. It would be 4.5%.
How much is that saving them?
Thousands of dollars.
Thousands of dollars. Yeah. So the smart buyers are taking advantage of the 2-1 buy down right now.
If you're in a $500,000 loan and 2% loan, you're looking at thousands of dollars in savings.
So we're rolling in the closing costs. We're doing a 2-1 buy down. Now, we're not worried about 6% because I'm down to 4% the first year. So I'm saving thousands of dollars. Probably, I think we've done the math based on a 550 house. They're probably saving almost $15,000.
And then year 2, 5.5. So in year 3, you go back to that 6.5.
6.5.
You qualified based off. So it's not like year 3, you're just getting hit, punched in the face with a higher rate. That's a rate you qualified for. You wouldn't be able to do it unless you qualified for that amount. The closing cost side of things, where seller credits are huge. I see them on probably, 80% of my deals. I don't know how many deals you turn over. You probably every single one, right? You sell a house, you're probably giving a seller credit. And it works out for everyone, make the deal sweeter, and everyone's happy at the end of the day. Closing costs are, a factor that we can't finance into the loan amount on a purchase. We can look at doing it on a refinance. So, even say you were paying your own closing costs, you utilize the seller credit for the buy downs because at times they're not cheap. You're still going to be, at the end of the day, at a net positive from the monthly savings over the 3 years. If you do a 3-2-1 buy down or a 2-1 buy down, that savings is going to cover the closing costs you put out of pocket.
Right. Yeah, that's going to add probably another. So we did the math on the cost on the buyer's cost of waiting was at just under $148,000. Now this, you do a 2-1 buy down, that's another $20,000, and this is just on a $500,000 house.
Huge savings.
Yeah, it's huge savings. So they're not thinking, they're not being advised,
Or
they're
it's
not being
huge
educated.
opportunity that people are missing out on.
Yep. So do you think that that's the best way for buyers to make deals work at higher rates right now? Would you recommend the 2-1 buy down, or
it depends the situation
arm?
and what they're trying to do. Whether an arm's not for everyone. It's a conventional product. Credit scores a factor where above a 620, and most likely we'll be able to get it done. But if you're a first-time home buyer, FHA rates are typically lower, which they always are lower, and benefiting from loan product can also help you get an offer accepted or not get an offer accepted. Where if you have a buyer that can go conventional, but they're so fixated on the lower FHA rate that they want to stay in the FHA loan, if you don't have a good agent and a good lender explaining to them the disadvantage they might be at putting an offer in FHA versus conventional, they're losing there too. So it's just having the right team by your side, real estate professional wise and mortgage advisor wise.
So they'll probably go, in your opinion, so do you think that rates are slowing the market down or just shifting it?
I think it's just shifting it a little bit. And I don't think it's anything that's going to be dragged out for the next 6 months. Hopefully, I think there was a peace plan that was just put in place with what's happening in Iran. So hopefully that settles things down. I'm no expert on,
Me neither.
World
not
conflicts
negotiating
and crises. I'm not calling
peace
anyone
treaties.
up, saying up. Yeah, I wish we could make the rates 2% again and everyone be happy for, the rest of the time. But that's unfortunately not how the world works.
How often are you seeing sellers accepting 6% over their 4%? Is it true what they're saying? There's just as many people at 6% as there are at 4% right now, or 3.5%. Is that a real metric
For
interest rates? Like people out there, they're accepting. I don't think that the people that are at 2% are ever going to refinance or do anything with that. But I think that there's just as many people out there right now that are at 4% that are at 6%. Mm-hmm. That's a close enough bridge for somebody to refinance or to switch or do a sell buy right now. Is that realistic or is that a myth?
I would go more on the myth side, but we have it all the time where people come in and say, hey, I have to refinance. Say somebody is in a relationship and they get a divorce or they break up and they're both on title, right? I have these all the time. I have like 3 of them right now. They're not the most fun deals to work with because neither side is happy, but it has to get done where they might be in a 3% interest rate right now, and now they're at 6.5. But life happens, and you got to get people out. And once you tell them like where their payment's changing to, more oftentimes than not, it's not like a super sticker shock. They know their payment's going up, but they just don't know the exact amount until we tell them. So,
and a lot of times I think too, you're blending in their global interest rate on everything. Between cars, credit cards, whatever, student loans.
Rate, which on refinances, we look into that all the time. Okay, you might have a 4% interest rate here, but when I pulled your credit, you let us know that all your credit cards were above 20% rates, your car loan's this. What if we go 2% higher on your interest rate, pull all the money out, tap into some of that equity that if you own a home, you're going to be in a lot better position than the person that misses out on $150,000.
Because I think that's what a lot of realtors think. They're like, oh, this person's never going to sell that they're at 3%, but they don't know everything that's going on in the background.
It's not
Consumer debt is at an all-time high.
Correct.
Inflation. The money's got to come from somewhere. People want to tap into their house. Their house has been their bank, as we show. As history shows, the 3 years, how much equity they would have and how much their home value has gone up. People are always looking to tap back into their house.
Some people might not have a choice, right? You start building a family. You're in a 2-bedroom small ranch. Okay, now we need some more room. Okay, well, like we said, life happens, and now you got to look at listing or retain that property, rent it out. You're going to purchase something else. You're going to have a higher rate.
I think realtors are just scared to have that conversation. Like, oh, Mary's at 3%. She's never going to want to do this. Like, listen, this is the time to talk to Mary because
you never know until you ask.
What's going on. You got to have that conversation. Don't let what's going on in the world deter you from having communication with your sphere and people that homeowners that have been in their home for 5+ years. They're sitting on a ton of equity and they may need to make that move.
All it does is add value, right? I reach out to all my past clients, not even to talk about refinances at times, just to say, how have you been? Is there anything I can do to help you? Some of them say, hey man, I'm in a little bit of trouble. My credit cards are racked all the way up. I need money. I need to tap into my equity. Some of them are, nope, love the house. Thank you for everything. Like, unless you ask, they're not going to come. No one's going to come forward and just be like, hey, I'm $50,000 in credit card debt.
Yeah.
I don't know what to do.
Yeah, I want to advertise
You know what I mean?
it.
Yeah.
What should sellers be doing differently today if they want to sell their house? If somebody's going on the market today, they're working with a realtor from the finance side, what can we offer? Should we put that out there? How does your lender credit works? I know you guys have.
Yeah.
We're offering $1,000 lender credit in our partnership with Milestone. So
we have an appraisal credit as well
that
for
be
buyers.
applied?
We saw an appraisal credit for buyers going through the end of April. One thing that sellers can do, and I mean, if the house is sitting where you could look at offering a seller concession, obviously to any buyer who comes. That's a great option because they could use it for their closing costs. They can use it to buy down the interest rate, anything like that. One thing I saw online is actually for condos. They're not the most fun loans to do because you're dealing with HOA companies, property management companies. But I saw a condo listing. They offered 1 year full payment of the HOA fees. So that's something where
that's amazing,
some of these condos, they could be $500 a month HOA. They could be $200 a month HOA.
Right.
But it is a figure that tacks up, and anything being provided to the buyer helps. But I mean, have you been seeing houses sit more, you think? Or
I think houses have been sitting there a little bit longer. I think closings are taking a little bit longer because we have the 10-day home inspection period. So we got to wait for that to get into purchase and sale. So that's automatically extending the closings and days on market. We are seeing some houses come back on the market because now everyone's doing a home inspection. But I think as far as sellers, what can I do to make my house more attractive? Utilizing the financing tool, I think all these sellers should encourage. I have that conversation with their realtors, saying, here, from the finance side, yes, I got to get it ready. Let's make it beautiful. Let's stage it. Let's do all those things that realtors offer and advise on. Obviously, if your house is in good shape, getting ahead of repairs, doing small punch list items. But now if I can make the home more affordable and have someone who's partnered with a great mortgage company, get those numbers dialed in, because everyone's focused on price.
Yeah, because I mean,
you have to, I think making that adjustment will get you more buyers in the door.
Yeah. You could do the price cut of $10,000, right? You think that's going to get someone in? Okay, great. $10,000 less on a loan for someone, $60 a month payment. Instead of doing that, the price cut, if you're offering $5,000 seller credit like we spoke about for an interest rate buy down or a closing cost credit, if they utilize the $5,000 properly to buy down the interest rate, it's a lot bigger savings than $60 a month from a $10,000 price reduction.
Yep, exactly. What are we seeing now as far as people when they're running their credit now? Their college student loans coming back. What should they be working on their credit now? Like, especially we talk about people maxing out like their credit cards and stuff. What are some credit tips like we can tell them and advise them so that they can be in a better position to buy?
Yeah, I always hear people say you want to keep your utilization under 30%, which personally, from what I've experienced and talking to credit repair specialists, you really want to keep that under 10%. 30% is okay, but it's not going to help your credit. Keeping it under 10 is going to help your credit. Another thing to touch on is student loans. Say if your student loan payments were deferred for years and years and years, however long it was. Once they kick in, make sure you're making those payments. And if you realize that you're behind on them, try to get current as soon as possible, because those are going to turn into derogatory accounts, which essentially is going to drag your credit down, which then two things will happen. You may not qualify for a loan. If you have a lower credit score, you're going to have a higher interest rate.
Mm-hmm. How long does it take to repair the credit?
Case by case situation there, where if it's we got to get you up.
I screwed up. I missed the payment.
Yeah.
Or whatever. What's how long is it taking to fix credit? Do I need to get a credit repair company involved? Mm-hmm. Is that something you could advise me on?
Yeah. So
what does that look like?
We'll do credit like what if simulators almost, where say we got to get a buyer up 5 points, because if they get up 5 points, they go into a different threshold and get a lot better rate, right?
Yeah.
Those are things we can look at on our end with the what if simulator, and we can let them know, okay, it spits it out for us. Hey, you're going to want to pay off this card. You're going to want to pay this card down to X amount. Once you do that, we can do a rescore on your credit and see if it improved where it should. If somebody comes in and they're, sub 600 and there's a lot of dings on the credit. I've seen some pretty gnarly reports. It just is what it is. People are, have to spend money to live.
Yeah, your starting point's your starting point in this journey.
Yep. It could take, 6 months. It could take a year for some people.
What are some of the best tips we can give them, like people that are going to start this journey now in the spring market? What should they do? Should they just go on Credit Karma? Or should they just sit down with a mortgage and a real estate person and really discuss things? What are some of the things I need to bring to you when we start to have this conversation? Tax returns, pay stubs, like bank statements, like what are those things?
The documents is standard. If you're a W-2 employee, ID, a couple pay stubs, some bank statements, and your W-2 for the last 2 years. And we could do a soft check on your credit. So if you come in and you're like, hey, I'm kind of on the fence. I don't really know, what I'm going to qualify for, if I'm going to qualify for anything. One, before an application is even taken, I can get a good scope of like where someone is for purchasing wise, just based off what they tell me. If they come in and say, hey, I make $20 an hour, I don't have any money in the bank, and I want to buy a $500,000 house, we're going to have a different conversation. I'm not just going to tell them no or tell her no, that's not going to work. We're going to go over, give them an expectation that is realistic on what they can afford and some of the steps they need to take to get to that $500,000 purchase price.
What is that? So entry level house, so if my bank account's at 0, should I waste time coming to see you? Will we put a plan in place? Can I borrow some of those funds? I can make the payments, but with inflation and everything going on, and if I'm paying off this extra debt, I haven't been able to stack a lot of cash. What are some options?
Yeah, and it's timing too, right? We're coming around tax time, so tax refunds, which you've touched on in the past, are a great way to get the ball rolling on the savings, right? Give you a little buffer to get that account going. We can look at, borrower might make great money. They don't have much in their bank account, right? All their checking and savings kind of covers all their bills, but they've been at a cushion at company or Joseph Abood for 10, 15 years. Yep. Okay, what's your retirement account look like? And then when you ask people that, they're like, oh, I can't touch it. Well, most 401ks or retirement accounts, if you can show proof that you're purchasing a home, they'll let you do a one-time withdrawal with no penalties. So you could have 50, 100,000, or just even the minimum requirement that if you're serious about it and you want to buy a home, you can look at pulling money out of that. Then we could always go down the down payment assistance route, which we have Mass Housing as an option. Bristol County Savings Bank has some down payment assistance options as well. Those programs are more in-person appointments. You got to kind of see all the figures because their guidelines are strict, right? It can't be like, oh, I make this much, and then it comes in and you're actually over the threshold of what they'll allow for the DPA, which is the down payment assistance. So if you're looking for assistance like that, it's more in-person appointment to figure out where we actually are to get the ball rolling, because those do take more time.
Yeah. Tell us a little bit about the relationship with Milestone and Bristol County Savings, because with you guys, we get the best of both worlds, right? We get a local bank, they have a huge commercial department. Yeah. So tell us a little bit about the affiliation.
Yeah, so I'd say a little over 2 years now, they purchased a percentage of the company. And with that, it opened up their adjustable rate products for us, their first-time homebuyer products, their Buy City products. It gave us...
Some people say, I want to go deal directly with the bank.
Yeah, which is great, because we are the bank now too, essentially. I have all their products that they offer, and then I also have all the broker products, which is nice. So all our investor, DSCR stuff we have over here, our residential mortgage at Bristol County, they have great ARM products. They have a 10% down for a first-time home buyer purchasing in Bristol County, Mass, or Providence County, Rhode Island. 10% down, no mortgage insurance for a first-time home buyer. So, if
how much does that save? Like, what's the average mortgage insurance on a $500,000 loan?
You probably that's a credit factor, right? Depends on that. Say if you have good credit, you probably look at $130 a month saving. So it's money. It's saving money is something.
Saving money is money.
Yeah, 100%.
We jumped around a lot of these things because I wanted people to see there's a lot to the process beyond
it's
rates.
Not the snap of a finger.
Let's not crash and burn my home buying dreams just because rates trickled up a little bit. There's a lot of work to put in this. There's a lot of fact finding. There's a lot of opportunities. And then you got to go out and find the right house. So I encourage everybody, this is a great market for you to be out there searching for a home. Rates in the 6s is normal. As history shows, these are great rates over time. Yeah. And we're never going to see the global pandemic rates. Hopefully not. Hopefully we never see another global pandemic in my lifetime. But do not hang up your home buying dreams just because rates went up a little bit. There's other work to put in. There's other factors that play into this decision. There's things that we can go through to make this home more affordable. And again, all the benefits we talked about. You throw in a 2-1 buy down, $500,000 home. The cost of waiting is almost $150,000, guys. So take the time, reach out to Jared. How do we get in touch with you?
You can come down to 128 Union Street, Suite 101 in the DeMello building, or reach out to me at 508-525-2455.
A lot of great nuggets. Thank you for being here, taking time out of your busy schedule. We love you guys at Milestone Mortgage. You guys are great referral partners with us. Thank you for everything you do for our customers. Ron Oliveira, Team Rosso Remax. Need me, 508-733-5931. You're going to want to like and share this. A lot of nuggets within this podcast. Listen, do not leave your home buying dreams on the shelf. Reach out to one of us. Let us help you on this journey. There's a lot of work to put in before we get you in the door. Let's start the process as soon as possible. Thank you.